Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Well, today we're talking about the retail industry, retail real estate, and retail investment properties. Please welcome my next guest, Kirk Williams. He is VP of Retail Services with Lincoln Property Company. They're headquartered in Dallas, and they develop properties all over the country and do third-party management and leasing. Kirk, thanks for joining us today.
Michael, thank you for having me. I've certainly listened to the show over the years, and I'm honored to be here.
Well, we appreciate you being here in Studio One, visiting us here in Atlanta. So, Kirk, on your retail properties that you see around the country that you guys handle at Lincoln, what are you seeing for tenant traffic today, and how does it compare to, say, the last several years?
Sure. Well, I'd say there's definitely a resurgence. It's not a renaissance by any means, but it's been a difficult time in commercial real estate for all of us over the last 4 or 5 years, if you will. Based on what happened in the early 2000s, but there is definitely a resurgence of tenant traffic. There was tire kicking for 2012 and 13, but now you're moving towards deal execution and people really looking to occupy and grow their top line over the next few years.
Okay, so you're seeing retailers get a little more serious about expansion. It seems like they were getting their toes in the water, but they were still a little skittish, right?
That's absolutely true. I think there was a time when the only large tenants, anchor-style tenants you heard from were discounters, and that was that way for a couple years. And now you're really seeing, the Field and Streams of the world, the Dick's Sporting Goods of the world, really look to grow their footprint over the next few years.
And how they finding the market is they're looking for these marquee, these top-level locations. How are they finding the market with the lack of new construction that we've had over the last several years? Are they able to find the locations they really like?
I do believe they're able to find locations they like, but if you're a retailer that's got great credibility and great name recognition, you're going to have a lot of suitors. So more so than I think the office world and the industrial world, development in retail is truly led by retailers. You don't do spec retail development. So when you go out there and you're Cabela's and you're looking at South Georgia or you're looking at Minnesota, anywhere in the country, you're going to have 4 or 5 developers that really want to be involved and have great sites that might accommodate you. You're going to have economic development groups that want to court you as well. So I think you can, depending on who you are, you can certainly find great opportunities. Yeah,
and as we've heard from Kevin and Bowden with RC Analytics, the retail investment market is hot, so investors are looking for these projects, so maybe it is time to build more. So at Lincoln, are you guys building right now, and is it time to develop more properties, and are you guys actively developing again?
I would say that we are actively developing very select locations and developments. We're really in acquisition mode, quite frankly, and I think, based on your discussion earlier, that's true for a lot of groups. There's good product type available in the market. If you're looking at core plus acquisitions, all over the country, they're good assets that you can still create value in the future. So I think the development cycle is coming along, but we are not there yet. We're looking to actively develop a lot, and I don't think a lot of groups are either.
And what are you seeing for underwriting today to win those properties, to have the winning bid? Are you having to do some pro forma underwriting and hope that things are going to get better to win these properties?
Well, those that you're going after, that's a good question. What we found is you've got to get pretty aggressive. And the reason is the truly quality assets out there, if you're looking to find a stable asset, there are a lot of suitors out there. There's a lot of money on the sidelines looking for those. And we found that we've had to get more aggressive than we thought we'd have to. Yeah. And but that's just where we are in the cycle, and you don't want to look back 2 years from now and say, wow, we should have picked that up.
Yeah, especially when you can lock in these low interest rates, right?
Exactly.
It's just incredible.
Exactly.
Yeah, I think that'll be the shame if any of us look back or any of our listeners look back and, 3 or 4 years from now, we look at, well, fundamentals improved and increased. We could have locked in a low interest rate for some amount of time, and we didn't do it. Well,
That's right.
so you got to get aggressive.
That's right.
And as you said, Kirk, you've got to have the tenants to make these projects work. It's all about providing the right products for these tenants to do well in. So who are the tenants that you're seeing are active? What type of tenants are expanding in it? And are there a few names you can mention that are active?
Sure. I think broadly around the country, the grocery segment is growing at a pretty fast pace. I think if you look at the Southeast and even the Midwest, you've got groups like Sprouts, Earth Fare, looking to grow their footprint pretty significantly. And that's spawned a good amount of development, whether that's typically a community center, so you're talking 80 to 100,000 square feet. The grocers, 30,000 square feet of that with ancillary retail and out parcels. That's good development for most areas of the country. You're also seeing the cycle of Dick's, they're growing. I mentioned Field and Stream. Costco's doing a number of units. I think they're doing 30 units in 2014 and 15. So those groups are growing. I think specialty uses as well. So obviously Apple's a strong name. Everyone knows Apple. They're growing. Starbucks is back in the cycle and growing again as well. And those kind of users are doing well. What you don't see is the usual suspects from the mid-2000s. You don't see Target doing a number of locations. You don't see a lot of those big anchor tenants out there doing a great deal. In fact, some are contracting. Sears, Kmart is a lot of news that you've seen over the past couple months. So.
Yeah, and what is the impact of some of this contraction when you look at Sears and Radio Shack? You look at some of these tenants that are maybe giving up space.
Sure.
What impact are you seeing there?
Well, Michael, as you mentioned earlier about the growth or development cycle, the reality of it is it's putting inventory back on the market. And, I know that we're going to close the loop on that, but we'll touch base on that in a few minutes.
We'll have more in a moment. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. We're talking about retail and retail real estate. My guest is Kirk Williams. He's with Lincoln Property Company. And Kirk, before the break, we were talking about some of these retailers who are giving up space, like Sears and some others. Are there tenants that are taking up those spaces and glad to get them? What is the impact on some of the space that's becoming available?
You're exactly right, Michael. I think that you asked the question earlier about the development cycle, and that's really led by, the age-old supply and demand question. Mm-hmm. And when you look at retailers like Sears, for instance, that's an easy one because, that's been in the news lately. It's putting inventory back in the market. So you're talking about, you're not talking about 10,000 square foot tranches. It's 80,000 square feet, 120. If it's on the end of a mall, it's 220,000 square feet. So significant amount of inventory back. What we have seen is that the discounters, they are looking heavily at that space, just depending on where they are. Anywhere in the country, if you could see a Sears, you're going to see Ross, Dots, Ollie's Bargain Outlet, Christmas tree shops. All these discount uses will look at that second generation space.
Okay. And of course, as you said earlier, retail is all about the tenants, attracting them and making them successful. Yeah. What are you guys doing at Lincoln these days to attract good tenants and keep them profitable in your centers?
Well, it's a great question, Michael. If you look at, I'll answer it broadly. If you look at development around the country and you say how many malls are getting developed, I don't believe there's one active today. So it's mostly open air centers. It's lifestyle shopping centers. It's mixed use developments. And if you think about the tenant's mentality, what they're going for is that creation of place, that sense of, environment that the developer's creating. And that's done a variety of ways. It's done through the architecture. Certainly, of course, the location. There might be, you're driving up that triple net cost with music that's playing out in the pathways and lighting and picturesque trash cans. I mean, these things matter. I think in 2002 it didn't matter. We were just putting together power centers with the usual mix of suspects on the tenant side. But now you have to do a better job of curating a place, an environment, and we're trying to do that in all our centers, whether we're acquiring them or whether we are. It's something that we've owned for some time.
And the tenants, and rightfully so, are a lot more picky about where they locate today, aren't they?
They certainly are. Tenant mix is always a question. Who am I next to? That's as important as anything. But of course, how does it lay out? Who are we next to? What are you doing that's different than just the average shopping center? I think to go out and find a piece of land and put up a box, anyone can do that. And I think the market, driven mostly by consumers, has to respond to that.
And what would be a tip that you would relay to retail tenants out there, Kirk, that are looking for the right locations, trying to get into the right spots?
Well, Michael, I think it's just like anything else. If you're can answer the age-old question of credit and rent and term, you're a very good candidate for most centers. But it's not like before. Just because you come to me and you've got rent and credit, you might not fit the image a center is trying to create. And I think that's sometimes the hardest answer to give a prospective tenant. They don't like to hear it. It's emotional. Why not us? But it's part of creating that environment now. And just like I said, you've got to respond to that. That's what consumers want.
Right. And we had that situation recently, and they do get disappointed. Well, Kirk, thanks for joining us today. We sure appreciate it.
Thank you so much, Michael. It's been great.
And thanks for joining us on the 40 radio stations, iTunes, and the show website. We appreciate you being with us. Also, check out the show on YouTube. We'll have some charts that you can follow along with. And be sure to join us next week. We're going to have interviews from Disrupt CRE. This is a great event in Boston where technology met capital, met commercial real estate show, and met commercial real estate. So stay with us and see it next week. Until next week, be sure that you always lead, learn, and laugh. And join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Brokerage, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive suite of powerful commercial real estate tools at an incredibly low price. Visit realnex.com. That's RealNex. Sozo Web Hosting and Cloud Solutions. Secure, reliable, and worry-free. Visit sozo.com. That's SOZO.com. FIU, Florida International University. Earn your master's in real estate online in as little as 10 months. Visit FIUonline.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. For more information on these great companies or for additional podcasts, videos, or blogs, visit creshow.com.